So most novice investors almost always get this wrong, and it's really easy to get wrong, and it's very difficult for one to sort of convince people of this. And this is that almost always your best returns, your best investment is in S&P 500 index funds. Or just investing broadly in the stock market. And the reason for this is because you're investing in all of the top performing companies, publicly traded companies, all the ones that you can possibly invest in the stock market. And here's the thing, is that the returns that you normally get by doing this are somewhere in the neighborhood of 8 to 12% or so. So probably about 10% returns every year. So that means that, if you've got $100, the next year it's going to be worth $110. And that's on average, right? Over the course of a very long run. And what people forget with novice investors or people that sort of have not looked at this a fair bit, and I'm not saying that I'm like a pro or anything like that. I'm just like a business professor, and what do I know? I know absolutely nothing. But the reason, or what I'm saying, is that they will look at assets that are close to them. Like a house, for example, and they'll say that, hey, you know what, my house went up from $300,000 to $400,000 over the course of 10 years. And look at how much money I actually made off of this particular asset. And what really that means is that that's actually not that great of an investment for you to do that. And you are actually not doing that well as an investor to do that. And there is a significant amount of risk. Most people actually take out a mortgage, which means that they're highly leveraged, very highly leveraged if you're an investor, and then putting that sort of leverage, that loan that you have, into an asset that could depreciate. It could, and it definitely, these things go up and down. You cannot say that it's always going to go up and stuff, and most of the time it does. In North America, it generally does, and most of those assets generally do, but they do go down. It's not unheard of. It's not crazy by any means. And so you're taking this very large risk for not a great return for what you're doing. So what you should be actually thinking about is okay, so this asset, or when I'm investing, I should be comparing with the S&P 500, right? So what that means is, all right, so for, it's less risky. It's not not perfectly riskless. You could lose your money, but over the long run, it generally increases at this 10%-ish level. The S&P 500 generally increases at that per year. And what you should be doing is thinking, okay, so if I'm going to invest in something in my life that is going to net, that is going to be riskier than that, it's going to have to net a return that is significantly much larger than that versus doing something that's relatively riskless, right? So, or less risky is what I'm trying to say. And so you probably should be actually looking at, for if it's something that's close to you and you're sort of investing in a single asset, you probably should be looking at 25 to 40 to 50% returns every year, right? So on a house, think about that, right? For a house, let's say it's worth $300,000. If it's a 50% return, what you're looking at is the next year it should be worth $450,000, which is crazy, right? Like you cannot fathom to do that, right? That is, some markets this year in 2021, it actually was doing pretty good in terms of your returns, but most years it doesn't do that, right? You're looking at just above inflation or somewhere around the inflation rate for most markets, unless it's something that's going, bananas. And so that's what you should be thinking about, right? When you're making these sort of investment calls, generally, for the most part, actually just investing in S&P 500 index funds is pretty good. We can get into all sorts of discussions about that. But, that's what you're looking at. And then if there's something that you want to invest in your life, that you truly want to invest in, it should have that possibility, just the possibility of it just skyrocketing and going berserko. And if it doesn't have that, then you're probably making a mistake with it, right? So, the one mistake that you're allowed to make is investing in your house, because what you're doing is just investing in more of a luxury than anything. And it's not necessarily in a good investment, but it's an investment in your luxury or your life that does return in terms of pleasure, versus, just getting some more money and that kind of stuff. So that's the important thing to consider, to think about. And I know it's really stinking hard for most of us to consider that. But you should really take a step back and think about, oh man, does this thing that I'm ready to invest in, whether it's a restaurant, a franchise, whether it is whatever, whatever the thing that you're looking at, does it have the possibility of it just exploding and making a tremendous amount of money? And if it doesn't, then that risk that you're taking, often it's not great. It's not worth it. And you shouldn't sort of consider that thing. So that's important to learn and to think about, is always look for that there is this massive upscale, risk that you're going to get, that you can get this sort of increase in wealth from making this generally very risky investment. Anything that's entrepreneurial in any sort of way, it's generally very, very risky. And a cap downside that you're going to lose. Say it's an investment that you put in for, $10,000. Well, then you should have this upside that could be $1 million that's there, right? And anything that is not at all like that is sort of explosive, think twice. Really think about it. Really, really think about it. I think that there's a lot of poor investing that's being done because of that, in terms of the risk and return that you're getting. And you're just looking at things that are more along the lines that you're comfortable with. So that's an important lesson to think about, and take care. And hopefully you learned something from this. Take care and have a wonderful day. Bye.